Hello, and welcome to the 15th episode of the Markets at a Glance series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So thank you guys for your patience. Had some difficulties during the meeting, but now once it's up, let's get to the point. So I would like to begin with a mic test. So you can hear me clearly. When you type hi on the live comment section, these will confirm that everything is working just fine. So afternoon, Fred, and thank you for your response. So I think it's time we start right away. So one of the most important developments in the market right now is that the dollar is currently very strong, and we are seeing a shift of trends as we approach the Wednesday meeting with the Federal Reserve Bank of the US. So the FOMC meeting is expected to cause a lot of volatility in the market because nobody is sure about the outlook that the Fed is about to present on the meeting. So on this meeting, we are largely expecting a 25 basis point hike in the Fed. So this hike is expected US interest rate 4.5, 4.75%. However, on the monetary policy outlook, we don't know whether the Fed will continue being hawkish, targeting even further rate hikes. And this is what is causing the tension in the market. So once we are sure about this, then we'll have an outlook of whether the indices or the US equities will continue to be strong. And at the same time, that understanding of whether the dollar will continue recovering or continue the weakness that we've been seeing for the month. So remember, among all the major currencies, we have seen the dollar losing against all these other pairs, with the Australian dollar being the most aggressive, followed by the pound. Also, the Japanese yen and the euro have also been strengthening against the US dollar. And this particular trend will continue if the trade happens to be more hawkish than expected. So from the current chart we are seeing, this is the price of gold, a very strong bull run on the 4 chart. They started back in early November last year. So from early November last year has been the same case, very strong momentum in gold. And also, if you look at the new year and how the gold prices have been performing, then you notice that this particular trend is relatively strong. So from the most recent price action that we are seeing in gold, is a strong pullback that happened last week, Thursday, Friday, then Monday, Tuesday, continued momentum towards the downside. And now in the last 1 hour, in the current hour, seems to be having a very strong bounce. So this could be a value area for gold where it pulls back, then continues the original trend. So nothing has changed overall in markets. So remember, fundamentally, we are looking at central banks running for gold with the US Federal Reserve Bank buying more gold. Same case as the People's Bank of China, the Bank of Russia, among many other banks. So as long as this particular trend continues and corporations and investors get in on the same, then we could be seeing gold continue to rally and finding this as a key bottom for the bear rally that we saw for the last days, and that is since Thursday last week. So this might prove to be a very important point for gold traders, perhaps seeing some benefit gold bouncing from this area and such. So if you check the trend line from November last year, and then the bounce here in December, followed by another bounce here in early January, then there's a good chance this is a key support level, and we see some further upside in gold going forward. So from one hour perspective, you can already see a very strong bounce in the previous hour. Current hour seems to be accelerating, so there's a good chance that we'll be seeing prices higher. Perhaps here, a lower target would be yesterday's low, and also yesterday's high. Those would be a potential target if the market happens to break these two. So potential target at 1920, yesterday's low, and also yesterday's high at around 1933 would be a potential target if these entry by buyers continue to push prices higher. Besides this, if you look at Euro USD, it's also showing some mixed signals where it was on a bull run on some form of bullish channel. So if I try and everything from the chart, go to the daily chart, then you notice the strong graph that also started in August, September, October, November, December, and then January. So a very strong bullish momentum happening in the daily chart. So after this break, pullback, and then a continuation all the way up. So if you go to a smaller time frame, in this case, the 4-hour chart, then you notice the strong run that has been happening in Euro USD, perhaps following this path here. So from this bottom here in October, then we have this bottom here in December, and then January proceeding to test the same level. So on the upper side, there seems to be a trend line extending from this high, and then following these other highs. So right now we can say that the most recent swing is towards the lower trend line. So having tested this, there's a good chance we will be seeing the Euro USD make a strong recovery. And if this happens, then yesterday's prices will be very important trading Euro USD going forward. So from here, so from this bottom here, seems like after the break, the market has tested yesterday's low. So if we break inside this range, we had a range here, period of time where the prices were just sideways. So if the market gets back inside the range, then a potential will run towards the previous high, and this is around 1.09134. So as we proceed, if you have any questions relating to the presentation, feel free to type those questions in the comment section, and I'll be responding to those questions right away. So hey, this is Luca, Alfred. There's Rip Profit. The other guy, I can't use the name. Thank you guys for joining the session and also for your commentary. Let's hope that we get to build value together from today's presentation. So I'd like to begin by, first of all, looking at the economic calendar and just highlighting the key data that we're expecting for the week. So for today, you can see that nothing much is happening. So we are basically looking at the Canadian GDP, which we have in a minute. Then after this, later on in the day, the Chicago PMI or Purchasing Managers Index, as well as the CB Consumer Confidence data for the US. So most important data or market data will be tomorrow in the morning, where we focus on the unemployment change as well as the unemployment rate in New Zealand. This has the potential to cause volatility in New Zealand dollar pairs. Then later on, looking at Kaizen manufacturing PMI for China at 4:45 a.m. And then later on, manufacturing PMI for Switzerland before we look at manufacturing PMI for the Eurozone as well as the UK. So most important data for tomorrow will be at 1 p.m. So at this point, we're looking at the CPI flash estimate, or basically an estimate of the European inflation. So previously, the reading was 9%. We're expecting this inflation to slow down to 9.0%. So we also be looking at the unemployment rate in the Eurozone, which is expected to remain steady at 6.5%, just like the previous month. And then the OPEC plus JMMC meetings, these will be happening all day tomorrow. So besides this, there's the ADP non-farm employment change. Remember, it's the NFP week, so we'll be getting a sequence of jobs market data for the US. So from ADP non-farm employment change, we also be having job openings. At the same time, we will also be having the non-farm payrolls towards the end of the week, and this will be on Friday at 4:30 p.m. So this could cause out of volatility in USD indices. We're talking about the S&P 500, the Dow Jones, as well as the Nasdaq 100. Also, don't forget the Russell 2000 index. So this could have an impact on the same. However, the most important data for US dollar traders will be the FOMC press conference and also the federal funds rate. As we all know, the previous interest rate reading was 4.5%. So on the data reading tomorrow, we'll be expecting a 25 basis point hike to 4.75%. So investors have already priced in this information. The statements by Fed Chair Jerome Powell already made sure that we have this expectation. Also, other speeches from FOMC members indicated the same, but the key focus will be on the FOMC press conference. So on this press conference, we'll be looking at the outlook for the first and second quarter of this year. So if the Fed remains hawkish and targets to make the dollar stronger by stronger rate hikes, then in that case, we will be looking at a strongly bullish dollar. However, if they slow down the rate hikes and perhaps target to maintain a peak rate over 5%, then in this case, investors pricing in a potential pivoting this year, and the dollar would start weakening from these news. So a lot of investors are following up on this information to identify the future trends of the dollar as well as US equities. So we all know that US equities have been on a very, very strong run this year, led by mostly the Chinese companies that are listed in the US stock exchange, like Alibaba. We have seen Pinduoduo. We have seen NetEase, Li Auto, all of them making some good gains this year. And there's a good chance they'll be continuing around the same path as long as we continue seeing the same policy in China. So the policy is pretty simple: low interest rates, quantitative easing is happening. They have a low inflation environment, 1.8%. And also COVID-19 restrictions were removed and oil prices have remained low. So all those factors are basically the right factors build a stock market rally. And we expected this to be happening this year. So as for US equities, we have seen some resilient earnings coming along. So with these resilient earnings, key highlights would be Microsoft, which beat earnings estimates, missed the revenues by a bit. It also revised the outlook lower, whereas it announced a 10,000 job cut for this year, but at the same time, it made a multi-billion-dollar investment in OpenAI, which is the company that basically owns ChatGPT. So with Microsoft making a big acquisition of ChatGPT, we could see Microsoft improving value in its products by simply adding the AI product. So those are some of the major highlights in the market, and we are looking to see even more activity happening this week. So besides the US, we'll also be looking at two central banks that are announcing their interest rates this week. So one of them will be the Bank of England. This will be done on Thursday. So the Bank of England will be looking to make a 50 basis point hike from 3.5% to 4%. And this could potentially strengthen the pound as the central bank gets more aggressive in the rate hikes, address the high inflation problem that is currently facing the UK. In the previous reading, inflation was way above 9% at 9%. Same case as the Eurozone, 9%. So if this particular trend continues, that is the central banks being aggressive rate hikes, then the respective currencies are expected to strengthen. So the main refinancing rate for the Eurozone is set to also rise by 50 basis points from 2.5% to 3%. And this will still be for Thursday. So key focus for investors will be on the ECB press conference. So if the ECB remains very hawkish to address the inflation problem, then bets on a strong euro surface. And in this case, create a right environment to trade the pound and the euro upwards against the dollar. So those are the key highlights for the week. So a lot of action is expected to be happening in the market. So besides what we saw as the expectation in the gold prices, that is the strong reversal here. It's also important that we look at Brent oil and how it has been performing over the year. So remember, we have had mixed signals from a Brent oil perspective. So if you're a Brent oil trader, you understand the key things that have been happening to Brent oil. So on the first week of trading this year, a very sharp drop here. And this was as a result of fears that we see a recession happening in major economies this year. However, recent readings that have happened in January have indicated that there is a very strong resilience, especially for the European economy, as well as the US economy, as well as Asian economies, including Japan. So the fears of major recessions are getting smaller and smaller, and this is boosting the demand for oil. So on the other hand, China posted some good economic data this month, indicating potential for industrial expansion. So manufacturing and services PMI are showing expansion. At the same time, we know that the Chinese were enjoying a New Year holiday last week, and now they have a zero COVID policy, where now we're expecting the Chinese economy to be operating at full gear. So in this case, it's a boost to the demand outlook for oil, and this is expected to drive oil prices higher. So on the wake of this week, we have seen a much stronger dollar. So remember, this oil is priced in dollars. Whenever you see the DXY or the dollar index showing some good strength, like it happened yesterday and early this morning, then it's an indication this is the asset dollar. So we saw it happening with the Euro USD, dollar breaking lower before weakening. So the strong and sharp reversal here happening is indicating a very common trend in the dollar index. So since the dollar index has erased all the gains that it had made early in the morning, then now we are looking at the gains that it had made yesterday on Monday. So if the dollar index was to reverse these gains that it made on Monday, then basically we're looking at the Euro USD and gold flying higher, and at the same time, UK oil or what we call Brent oil would be making a much needed reversal here. So from the 4-hour chart, you can see the major swings that has been happening. So we could be seeing a reversal here. It's already happening on the 4-hour chart. So if this happens to be the bottom, then potential bet for stronger prices on the books, especially considering tomorrow's meeting OPEC. So if the OPEC countries happen to decide that they will continue cutting oil output, then this would be good as well as a positive news on oil. So we will be expecting some further upside momentum in Brent oil prices. So as for the S&P 500, we know what has been happening. So this is a chart of the entirety of last year. So last year began here. This was the peak of the bull market and the start of the bear market. So very crazy swings happened last year. And this year started with a very quick run towards the upper trend line. So this quick run was very instrumental in determining new positions for February. So as we head into February, we'll be looking at a very binary situation where on one hand, the S&P 500 will pretty break this particular resistance, or it could find that resistance as holding and pull further back downwards. So a lot of investors already betting in this. You can see on Friday, there was a very strong rejection of higher prices, and this established the bearish momentum that we saw on Monday. So on Monday, prices opened with a gap down, crossed the gap, and then pushed lower. Then today, we continue pushing lower despite the last 3 hours that are seemingly reversing this particular trend. So there is a good chance that if the Fed happens to be more aggressive with the rate hikes, gives a hawkish outlook for this quarter, then the S&P 500 could be finding this as a major resistance and pushing further back downwards. So as per now, seems more or less like a retest of today's high. So if price keeps on pushing higher, then the area to be watchful around be a price level of $4,074 per share. So a rally towards $4,074 per share would be very interesting, especially as we approach the Fed decision. But then if this doesn't hold and the market doesn't continue this bullish momentum, then overall we're looking at further downward momentum. Perhaps this all that we saw last week here on the 25th of January. So some good key price levels to watch. 39.48 on the lower side and 40.74 on the upper side for the S&P 500. So overall, we haven't broken structure, so the bearish bias remains in the market, subject to what the Fed will mention in its meeting. So if you have any questions in the markets that you'd like us to check as we proceed with the session, they are more than welcome. Just suggest in the comment section and looking at that right away. So which platform is this chart displayed on? This is the MetaTrader 5 trading platform. It's available on the FXPesa website. So you can always go to fxpesa.com, create an account, and then download the MT5 or the MetaTrader 5 trading application for your device. So you can install on any device running Windows Apple. So I just shared the link so that you can find that easy. So if the Fed continues with interest rate hike, doesn't that mean the USD will be stronger, hence Euro USD will fall or not? So it's a very good question, Fred. So the markets are forward looking. They have already priced the current expectation of 25 basis point rate hike. So the markets are forward looking. So they're looking at the outlook by the Fed during the FOMC press conference. So if the Fed gives an outlook that it's expected to make even stronger rate hikes during the year, then in that case, we might consider a stronger dollar and a weaker equities. However, from the current trend and what we are seeing is that the Fed has moved from 75 basis point hikes last year. It's brought down to 50 basis point hike, and now it has moved towards 25 basis point hikes. This is an indication that it's almost getting to the end of the rate hike cycle in preparation for pivot or in preparation of rate cuts. So in this case, as long as inflation remains along the current trajectory, then a slowdown in rate hikes is indicative of a potential bottom in the bear market and in preparation of a potential rally in equities, which would be having an opposite reaction. In that case, the dollar will be weakening for equities rally. So NASDAQ, considering their Apple and other companies' news coming out, this is a wild card that we are yet to consider. So remember, we have quite a number of earnings happening this week. One of them being Apple, which has a very strong weight in the NASDAQ. Also, we have Amazon, has a very strong weight in the NASDAQ. We have Google or Alphabet, as well as Meta platforms of Facebook. So all of them are reporting their earnings this week. So what happens is that if these companies happen to beat earnings strongly and rally, then they will have a direct impact on the NASDAQ and be seeing some further upside. So I don't like betting on news that are yet being presented. So I'd rather wait and see the outcome of these earnings. And if they prove to be strongly positive, then perhaps go for a strong bullish position in the NASDAQ. So that's my analysis for the NASDAQ for this week. So in other markets, USD JPY, we know that there is an increasing bet that the Bank of Japan will eventually pivot its current policy. So this pivot is majorly based on what we are seeing here. So on one hand, the Bank of Japan had maintained that 0.1 interest rate. A lot of quantitative easing last year. They are still continuing with the same, but the key thing that changed at the top here was that the Bank of Japan started intervening in the currency markets. So with that intervention, we saw a reversal of the trend where the Bank of Japan started strengthening the Japanese yen, entering this particular channel that has been holding for the last couple of months. So as you can see, it's always a struggle towards the upper trend line, but once the market gets to the upper trend line, we have been seeing some pretty impressive runs happening here with a lot of aggression towards the lower side. So it's more or less like bulls climb up the stairs, bears jump off the window. So it's a struggle that lasted 2 weeks towards the upper trend line, and now we are approaching a decision point where USD JPY currency pair could potentially make another sharp drop towards the lower side. So the only reason that we would be expecting this to happen is either of two things. One, Bank of Japan indicates that it's ready to raise interest rates or to cut its quantitative easing program. And cutting its quantitative easing program would be in line with abandoning the yield curve control program. So if the yield curve control program was to be abandoned or expanded from 0.5% maybe to 1%, then that would be a big shift in getting some drop. And on the other hand, weakness in the dollar being caused by the Fed being extremely hawkish. So if the Fed slows down on the rate hikes and decides that the rate hikes are enough, they're no longer looking to take further rate hikes, then in this case, we're looking at some further drop in USD JPY. So it's not a far-fetched idea. We already saw it happening with the Canadian economy last week. So they did a 25 basis point rate hike. And then from the monetary policy outlook, the Bank of Canada decided that that was the last rate hike in this cycle. And now they are looking to keep rates there, observe the inflation in the economy before making another decision. So if the US was to make another a similar decision, just like the Bank of Canada, then in that case, be interpreted as as dovish, and in this case, we will be looking at a potential run towards the lower side in USD JPY currency pair. So if I was to remove all of this noise, then see that this high that we saw a week ago, and it's more or less like a triangular movement are basically saying that this market is sideways, awaiting another decision, either to break higher or even break. So a lot of investors are bet on this out of indifference in the markets. So eventually a break up or a breakdown will be due to happen. So for the UK 100, we're already seeing something similar happening. Try and post this. So a market that is on a very strong bull run happened to make a very strong break here in January. Went all the way up to close to an all-time high. So the all-time high was very close, around 79.10. And then once it hit this resistance, pulled back down into this particular wedge. We can call this a falling wedge. So once it got to this particular falling wedge, you can see the crazy swings that the market has been forming. So I'll try and remove some of this noise here. So now you can see that yesterday there was a sharp break up before the market went back into pattern, dropped all the way to support, and then rallied all the way towards the resistance. So it's basically indicating a market that is still under sideways momentum, awaiting the BOE meeting that is happening Thursday. So there's a good chance of the market trading in between here. Remember, this is the FTSE 100 or the UK 100. So at some point, we'll be getting a direction. And my bet is that we will be having a bearish breakout. So main reason that I'm betting on a bearish breakout is because it doesn't make sense for UK equities trading at an all-time high when the UK consumer is suffering. So the UK consumer is currently faced with a very high inflation environment, which currently stands at 9%. Energy bills are still a big problem, and also the geopolitical risk in Russia-Ukraine is getting worse and worse as more Western economies are sending their tanks to Ukraine to support the war. So if the political tension gets worse, energy problem becomes bigger, and the consumer budgets get stretched further in the UK, then we will be expecting these companies to start weaken, and this particular triangle or this particular wedge is expected to break past the lower side. And that's my personal analysis. So as we continue with the presentation today, it's important to note that this session is it does not constitute investment advice. It's not a recommendation to trade. You should always do your own due diligence, risk practice, proper risk management. And if you need investment advice, then go get services from a licensed professional. So as for now, we keep on going. So pound yen seems quite volatile, trading within a range, more or less of a sideways momentum. So we can conclude that February has majorly been markets moving sideways, awaiting the central bank decisions that are happening later this week on Wednesday as well as on Thursday. So pound USD is one of the assets that we have not checked yet. So we were expecting a potential break. The lower trend line happened yesterday, and now we can already see what is happening here. It's a market that is facing a very strong horizontal resistance. So we can't ignore this area here. So from this perspective here, we can see that the market attempted a couple of times, let's say 5-6 times to break this level, was unable to break, and now the dollar strength indicated a reversal here. So this resistance was in accordance with the same resistance that we saw in December. So potentially seeing the dollar strengthen against the pound and push back down. So from the 1 hour chart, we already had this break yesterday, a retest early in the morning, some further continuation downwards. So potentially, if the bearish trend continues, then it's in order to target a price level that we saw recently here as a major support level. So 1.22631 might be a nice target for short selling traders. So that's it for pound USD. So still checking to see if there's more commentary or questions from you guys. So US indices appears to have responded by going up the news of US employment costs. I'm wondering how these will be sustained. Is buying a wise strategy? So yes, we have been experiencing a very strong run in January for all US indices. The S&P 500 being up about 15%. And also we have seen some major highlights from Warner Bros. Warner Bros. Is the best performing companies in the S&P 500 today. At the same time, we have seen companies such as Tesla make an impressive run after strong earnings earlier this week. So in this case, it's creating a false narrative that the bottom is in, and now that the stock markets are headed higher. So the key factor that our always been saying for the last months is that the Fed is still hiking interest rates, and as long as it keeps these interest rates at a restrictive level, then we'll be seeing more liquidity being pulled out of the markets. So in simple terms, the US consumer will be paying more of their income towards the basics, that is food, energy, transport, housing, as well as healthcare, and they'll have less disposable income to spend on other products. So what this means is that at some point, we'll start feeling the effect of the high inflation, where the sales revenue of the companies, the S&P 500, will start slowing down, and people will realize that the bottom is not in yet. So the bottom will be in once we start seeing the Fed cut interest rates. However, as long as the Fed maintains the policy of raising interest rates and keeping them at a restrictive level, then the bottom is not in yet. So at the same time, we still have a wild card where oil prices could start regaining. And as long as they start regaining, then you could see a spike or a reversal in the trend that we've been seeing in inflation. So oil prices are a big factor here. And remember, the US ran down its strategic oil reserve last year from March through to December, where President Biden was supplementing the oil supply and pushing oil prices down. So the OPEC countries were not happy with this. They mentioned that they could be looking to tighten supply, and they have a meeting this week. So if they continue doing the same, that is cutting supply, then see oil prices resume the bull market that we had early last year. So if this happens, and this could potentially happen in February, then inflation take the opposite direction. So we could have a second wave of inflation. And if this happens, it's not going to be pretty for equities. So that's one key thing to happen, to observe. So the proper or the absolute best economic condition for a strong market rally is an environment of low interest rates, low inflation, and just like it's happening in China. So in the US, it's high interest rates, high inflation, and low quantitative easing. So that explains why we are seeing a lot of tech companies go for massive layoffs. We saw Microsoft doing 10,000 jobs. Amazon is also doing 10,000 jobs layoffs. This year, Facebook 12,000, Google even more, and so on. So with these companies cutting their staff, it's not like they are looking to expand their production or their business activity. So we're expecting these companies to be preparing for a bad economic environment. In that case, that explains why they are cutting jobs. So in preparation for bad economic period, they are also contributing to lower inflation expectations, higher inflation expectations. And this is reading the US economy right into a recession. So as a very aggressive Fed, companies cutting jobs, cutting their outlooks, all of these is indicative of a potential recession in the US. So the current bull run might fool you that the market is reversing, but personally, I don't think that is so. So markets have remained within structure. For the S&P 500 daily chart, this is within the bearish market structure. So we haven't yet broken the resistance. So we could see a potential break for a period of time, maybe some force break, but then the overall direction remains towards the lower side. So I still have a bias that the market will continue pushing down lower. So that's it for today. If you have any questions or comments, they are much welcome. Any of your questions or comments. So as for the Dow, it's the same case. There was a break, and this was back in November. Market got to this resistance, printed a higher high compared to the August high, pulled back down to retest the lower trend line, and then up and then down. which basically indicated that now the market is trading sideways. So if you look at these swings, the indicative of a triangle. So the triangle can be easily plotted here. So if I zoom out, you can see clearly that this market has been moving sideways for this particular period, and this is from October last year. The Dow was the most resilient US index, and now seeing these swings, then everything else can effect on the earnings of the companies in the Dow against the decision made by the Fed. So the Fed meeting will most probably give direction to the Dow Jones Index. So a break above this level, that is 34,174, would be indicative of some further upside. And also a break below 33,164. However, before that break happens, then there's a potential for intraday trading here. For instance, you can see the strong rejection with the doji candlestick followed by two bullish candlesticks, indicative of bullish momentum in the Dow. So if you are an intraday trader, there's a good chance you'll be seeing some further upside in the Dow going forward today. So the New York session has started quickly with these equities, whereas the dollar index is weakening. So it's an easy way of identifying potential trade in the markets. So I agree with you on current borderland. It's not supported by any fundamental to warrant smart buy. So as I mentioned, the most clear or the easiest one to understand is the UK 100 or the FTSE 100 being at an all-time high despite having rising interest rates, very high inflation environment, and also a very strong geopolitical factor affecting investor decisions. So that alone, seeing the FTSE 100 close to all-time highs is worrying enough to start looking for potential bearish positions. So I've seen a comment requesting that we check on Audi card. So let's check on this right away. It's a clear bullish momentum where the Australian dollar is aggressively rising against the Canadian dollar. So remember what I mentioned, the Bank of Canada indicated that it has reached the end of the rate hikes. So with this in mind, expect the Canadian dollar now to start weakening. So what better pair to pair the Canadian dollar with than the Australian dollar that is looking to get aggressive rate hikes where inflation has reached a 40-year high. So in this case, I would be buying the Australian dollar against the Canadian dollar. So any presence of indications that buyers are entering this market around this area would be taken as a bullish signal. So 0.94 seems like a good round number to track and look for potential entries for a buy position. So 0.94 seems like a nice target. You can already see the sharp entry here, and we're already seeing the market seeming to show direction of upwards. So if I zoom out, it's a bullish channel. It has been holding for quite a period of time. So now we're seeing market find support here, and the fundamentals are indicating. So thank you very much, guys. Thank you for your time. I hope to see you on the next session. So remember, we are doing more and more sessions. So we'll also be doing a session on Thursday, that will be the market pulse at 8 p.m. And also the Twitter spaces have been resumed. We did one last Sunday, so we'll skip this Sunday. Then on the next Sunday, we'll be having another Twitter space. So thank you very much, guys. Hope to see you on the next session. So say something about gold, silver, and oil. This is something that we already covered. So apologies if you joined late. Kindly just go through the session again. It's available on YouTube, and you will have the first 10 minutes. We basically covered deep analysis on gold. This will give you the insight you are looking for. So Euro USD, we have already covered that too. So thank you. Hope to see you guys on the next.